Hello traders, this is Blake Morrow. You are listening to the week ahead video for August 23rd, 2020. I'm actually filming this just a day early. We have some plans for this evening, so I wanted to make sure that this video was out before tomorrow, because I didn't want to have to get up tomorrow morning early, super early to do this. I wanted to get it out for you today. But before I get into the video, let me go ahead and explain that if you haven't used ForexAnalytix, it's only $1 for 10 days. $1, 10 days. That's it. If you want to figure out how to get it possibly for free, well, you can join Pepperstone Securities or open a Pepperstone Securities account. If you open a live trading account and then you also do some trades, you can actually get it for free for a period of time. Also, if you live in the United States and Canada, United States or Canada, excuse me, you can also take a look and see what Forest Park can do for you. They can actually get you cash back rebates on your trades. If you haven't done so already and you live in the United States or Canada, I'm not too sure why you wouldn't. But also, when you do try out ForexAnalytix, make sure you download the mobile application, so this way you have all of our features, minus a couple actually, on your application, on your on your mobile application, whether it's your phone or your phone or your tablet. Sorry, just thought about that for a second. Actually, one of the features that's not going to be on there is your data flash. The data flash actually shows you news alerts when they are released. It's very quick. It's comparable to a Bloomberg service when news events come out. We do it live on the F.A.C.E webinar every week, and almost every day that there's news events being released, and you can see it's pretty darn comparable, and sometimes it actually beats Bloomberg, which is surprising. There are a lot of features on ForexAnalytix. It's feature rich as far as the platform goes. I don't have to go into everything like the news feed, the risk management tool, the calendar of events that's on there, your integrated Twitter, all the different analysis. You guys can play around with it and try it out while you're testing out ForexAnalytix. But like I said, it's only $1 for 10 days. Now, I got all that out of the way. So let's talk about the more important things that are happening this next week, and let's talk about what happened last week. Matter of fact, last week was a pretty important week for the dollar, and I want to talk about the euro for a second. I'm going to pull up the weekly chart of the euro dollar, and I want to show you this really big reversal candle that we've seen here. Now it isn't as pretty of a weekly reversal candle as I would want, because this is what we call a long upper shadow doji. But what you'll notice is that false breakout above the 119 level. That is a risk, especially when you're talking about the big 618 retracement on a weekly basis coming in at 118.22. The fact that we've had a failed breakout attempt is now a risk for the dollar. Now, there's obviously a big event that's happening this next week, and if you guys, I'm actually gonna stop right here, and I'm gonna talk really quick about this big event. So the big event that's happening this next week is going to be the Jackson Hole Symposium. That is a doozy, because let me see if I can find the speech. Yeah, it's called Monetary Policy Framework Review. Now, and that's by Chairman Powell, obviously. The Jackson Hole Symposium is going to be a virtual symposium versus going to Jackson Hole, Wyoming this year for obvious reasons. But this is obviously I would say the most important. If you trade currencies, it's the most important speech, and it's going to be 6 o'clock my time, 9 o'clock in the morning, 9:10 I believe, in the morning on Thursday Eastern. Now, the reason why this is so important is because most market participants seem to believe that the Fed is going to let inflation run hot and possibly the economy run hot as well. Now, what that basically means to us is that the Fed is probably going to keep rates low for not just a year or two, but maybe 2 or more. They're gonna let inflation run a little hot. If that's the case, and this is what the market really believes at this point, then we're going to see probably a pretty big dollar sell-off, continued dollar sell-off. That would be a euro continued rally. We'd see a rally in risk assets like stocks would continue to hit highs. We would see gold rip past 2000 again, and probably closer to 2300, and all's well for stocks, right? Stocks will continue higher, which I'll go into those charts here in a moment. But the dollar, and let me pull up the dollar index for you. And this is the dollar index itself, and let's talk about this chart here. You can see that the dollar index put in that, this is the opposite of the euro. It's a long lower shadow doji, which tends to be a bullish signal. It's almost like a bullish hammer, if you will. And you can see the little circle down here. This is the false breakdown. Now the dollar is set up for a bullish reversal. I'm not saying that we're gonna get it. I'm just saying it's set up perfectly. So if the Fed, and let me rephrase that, if the market walks away on Thursday morning believing that the Fed's not going to let inflation run a little hot, or let the economy run hot, then we might actually get a bounce in the dollar. We're going to get a pullback in stocks. We're going to get a pullback in gold. And the dollar, like I said, is set up perfectly for a reversal. The charts tell us that that's what's coming. The market doesn't believe it. And frankly, I don't think I believe it either. But that doesn't mean it's not going to happen. If I don't, I can believe whatever I want, but in all actuality, we've got to wait till Thursday to figure out exactly what the Fed's going to do. And I will tell you that between Monday and Thursday, it's going to be really important for you guys, all you traders, to trade very lightly until we get some clear indications of what the Fed is up to. But given the fact that stocks, and let's talk about the S&P for a second, given the fact that stocks are right at all-time highs, we closed basically at all-time highs, 2 points away from all-time highs. We might have had a closing high we did have a closing high, all-time high in the S&P, actually on Friday. And really, let's take a look at this. I'm going to show you this real quick. Not that. I didn't want that. I didn't want to move that. Oh, that's okay. I'll just leave it right there. All right. See this fib right here? That 161% extension comes in at 3420. I would not be surprised if we challenge new highs, hit the 161% extension, but I'm going to say, you remember Star Wars where it was General Akbar, the guy that looks like a big squid? You remember that guy? Remember when he screamed, "It's a trap," right? Well, if we get a bullish breakout in the S&P, and this is an hourly chart, if we do this, I'm going to say, you know what? It's a trap. I wouldn't get long, especially if it happens, obviously, going into Thursday. Like, let's talk beginning of the week. I think that if you actually want to fade stocks going ahead of this, and I'm not saying this is something you should necessarily do, but this is something that I would think might not be a bad idea, is selling equities when they hit new highs. I know it sounds a little crazy, but maybe it's something that you just consider. At least I'm going to be watching for a reversal up there. That's what I'm going to be looking for. And it's not just the S&P. Let's take a look at the NASDAQ. If you look at the NASDAQ, we are almost at the 161% extension. This is the June move, right? Took us right where we're at right here. But if you look at the 161% extension that comes in at 11,700, that would be the COVID-19 161% extension, right? It takes us right up there. So let me illustrate what that looks like to you. Think General Akbar. Boom, new highs. It's a trap. Didn't work the way I wanted to. It's a trap. It's a trap. It's a trap. It's a trap. No, I'm just kidding. I'm being exaggerated here. But what I'm trying to point out is some really, really big levels reside just above the highs. And I think if you're patient, you might actually be able to get those early next week up at these levels. 11,700 in the NASDAQ, which is only 150 points away. S&P probably another 25 points or so. All right, and again, how it actually looks in currency terms, you know, we might get the euro bouncing back to 118.25 maybe. You could see the Aussie, you know, that's in this channel. Let me go to a 4-hour chart. Might bounce back to 72.50. Pretty big resistance up here. Big 161% extension of this move that's we've been rejecting. But all really important levels. I want to point out for you dollar guys and gals, this is a currency pair that was my chart of the day. Actually, I want to say it was Wednesday or Thursday. If you guys don't know where the chart of the day is, you follow ForexAnalytix on Twitter. You'll get tweeted out that chart every day. It's 4 days a week. I put out, you can go to the blog too. You can see the chart of the day here. Chart of the day would have been 2 weeks ago. I want to say maybe it wasn't a chart of the day. Heck, I thought it was, but never mind. Okay, well, here, I'll give you my future chart of the day. What we took out here in the US dollar Norwegian krona is we took out a pretty big trend line that we've been following since the post-COVID move. We're back above 9, and we hit 161% extension here. We held the 881, and the reason why I'm pointing this out is because maybe it's giving a heads up of what's to come with the dollar. So guys, I'm just going to say that we have to be on watch for a potential, whoops, that's not what I want to do. We want to be set up for a potential dollar reversal next week, but it all comes with the FOMC, or excuse me, the FOMC, the Jackson Hole Symposium on Thursday. Sorry, it's already late in the afternoon on a Saturday for me to do this. And guess what? I haven't not even had a beer yet. All right. Are there other things happening this next week? Sure. We got like New Zealand retail sales. It's going to be first thing in the morning on Monday, which will be Sunday night as the FX market is opening. We have durable goods orders on Wednesday in the U.S. But the Jackson Hole is going to be the real big zinger, you know, going into Thursday. And then Friday we actually have some inflation data with like personal income and spending and PCE, Chicago PMIs, consumer sentiment, stuff like that. But really the showcase next week is the Jackson Hole Symposium. So I'm going to leave you with that. And guys and gals, if you found this video useful and you think it's going to be useful for you next week, please retweet it. You know, if you caught it via Twitter, please retweet it. I personally really appreciate that. And give us a thumbs up on YouTube. Our team really appreciates that. The ones that are editing and putting this out for you guys each and every week for free. And then subscribe to our channel so you don't miss any of the great interviews that Dale Pinkert does with so many market traders, analysts, insiders throughout the course of the week. And guys and gals, my name is Blake Morrow. You have been listening to the Week Ahead video, and I hope you guys have a wonderful remainder of your weekend, and I'll see you on the F.A.C.E webinar tomorrow morning on Monday, bright and early. And if you haven't registered for that, you can find a link in the description to register for that. It's free every single day. All right, guys, have a great one. Talk to you soon. Bye-bye.